Let's start with the China news flow. A lot of anticipation once again, Paul, about what we might hear then. I suppose the crucial thing is going to be the nature of the fiscal stimulus and how big it is and what form it takes. I suppose there's a risk we don't get that, though.
Good morning, Anna. Yes, there might be light on details, and that stands a chance of disappointing markets. On the other hand, there is some expectation that we should get a little bit more, maybe on the consumer side. You know, those stocks have been performing well today, maybe encouraging more spending, more travel. Some of the cities are already front-running that a little bit by handing out some coupons, and we're seeing some decent performance in equities today. On the monetary side as well, you know, there's a lot priced in now in terms of expectations for further rate cuts. We've got very low yields, particularly at the one-year tenor, a reasonably steep curve as well, expecting those cuts to come in pretty hard and pretty fast by the looks of it, and that has been something that's been weighing on the yuan as well. Now, in the background, we've also got the sort of what is China going to do with the trade negotiations with Trump. They seem to have been lining up some sort of bargaining chips in the past week, and we just learned, you know, kind of from the most recent press conferences that there's a bit more openness to hold talks as well on that, so that could give the market a little bit of hope as well, and moderate some of the movements that we've been seeing across the currency space.
Paul, the word I'm hearing a lot this morning is hope. We hope that this is going to happen. We hope that that is going to be happening. How much do we actually know, and how much could change in January?
In terms of China, we await more details. I think in terms of monetary policy, we could see action as soon as this week. They've been pretty clear in telegraphing the idea that there would either be rate cuts or some easing of the triple R. So that may come before the new year, or, you know, it being China on Christmas Day or on New Year's Day, who knows? But at some point soon, the market is getting ready for that. I think the rest of the policy details, you know, the market would love a big bang, but it's likely to be more of that incremental drip feed. So there'll be excitement, then dissatisfaction, and that kind of cycle for a little bit longer, most likely. On the other hand, you know, there has been something coming down from the top that there's a need for a little bit of a pivot, and the market is still attaching onto that for sure.
Paul, you're no stranger to the FX story, of course, in Asian currencies. The trade-off between the Korean won, the Japanese yen, and, of course, the Chinese yuan as well as a function of the manufacturing process and the manufacturing relationship with the United States. Which country, given all the headlines, do you want exposure to right now?
Which country do you want exposure to? I think it depends. If you're looking in the FX space, it's very difficult to play it at the moment. I think that China is such a big influence and anchor for the rest of Asia that wherever the yuan goes is going to matter for everything else. I think if you're looking across the stock markets, you know, Korea has nearly erased all of those losses now that it had from the political volatility, which is pretty interesting. People coming back in, looking at those valuations. China already has a lot priced in. Japan, well, you know, so a lot of the gains already seem to have been done. So there will be stuff on the equity side, but also that currency volatility is going to be really crucial too.